Welcome back to the Success Blueprint with Jason and I, and we have our good friend Landon Kesler. Landon is a mortgage officer here in town. He's been doing it for the short time of 20 years. Landon he's an awesome friend. He's a great in the community. He is a father of 10 kids, and he's just a great guy. So we have a lot to learn with new things that are going on with mortgages and just in his life in general. And he's been one of the most successful loan officers in town. He's seen everything, and so we'll dive in. So
it's an honor to be here. I told you that when you invited me. This is incredible what you got going on here.
Honor, huh?
Yeah, absolutely.
Wow. Awesome.
You better sit up a little taller.
So Landon, what got you into mortgages?
Yeah, so this was back in 2006. So this is the 20-year anniversary. I was working corporate at Albertsons in Boise. I was at dinner with my sister-in-law, and her sister was in the mortgage business. And I don't know how long she'd been doing it, but as we were chatting, and I was obviously not happy in the corporate world, it's just brutal. She said, you know what, with your background, you'd be really good at mortgages. So I started asking questions. Just at that time, you legit could just have a pulse and get a mortgage. Like, you just had to be alive.
Right, the ninja loans.
You didn't have to.
You didn't have to prove anything.
You'd have to prove anything. You'd have to have a job. The subprime lending was just going gangbusters, and people were making a ton of money. And so the more research I did, they're like, man, this is an incredible industry. 2006. So I actually made the decision. I found a brokerage that I set up with. Quit my job, took out a second on my house that I had just purchased. Because, you go to 100% financing on a HELOC back then. And just jumped in with both feet. And the first 2 years were actually really, really good. Just hit the ground running, did everything I could to be somewhat successful at it. And
what was some of those things?
I just spent the time. I mean, you see people get into businesses or a new career, and they just go through the motions. I mean, I was there early in the morning until late at night, and half of the stuff I was doing was just learning. It wasn't producing any business. It was just learning how to do this and how to do it the right way. I come from a family of 6 siblings. My wife comes from 10. Seemed like everyone was buying something. So I kind of had a really nice start because most of my in-laws and siblings were doing something in real estate. Sure. And they gave me a shot at it. So that helped me get started. I had a really good mentor at that time who kind of believed in some of the stuff I hadn't really heard of before, how your thought process can impact your life and success, vision board stuff. And we went to he signed us up for this Millionaire Mind seminar up in Seattle. T. Harv Eker. I don't know if you've heard that name before, but he wrote a book called The Millionaire Mind. We went up there for 4 days, went through this, they call it where you redo all the files in your brain that you were conditioned as a child and growing up, things that your parents would say about money, about finance, about success. So we basically just restructured, it rewires your brain. Of course, they're trying to sell you more product while you're there. It's just that it's an intensive thing, and that really changed everything for me as far as mindset goes, and put me on a right track just to be willing to do whatever it takes to find success in what you're doing. It doesn't really matter what you're doing. It was just, for me, it was mortgage, and that meant spending time to really learn the trade.
Was that right as you started, like in 2006, or was that a little bit after? Oh, it was.
Yeah, it was
nice.
Right in 2006, he got us going there, and then 2007 was actually a phenomenal year. First time I'd ever made 6 figures.
Still grinding.
I mean, those that know the mortgage business back at that time, like you were not capped on what you could make commission-wise. There was no regulation as to what a loan officer could make compensation. So you could actually sell products that were paying 4 to 6% in commissions. I say that out loud like that is criminal. Like that's you shouldn't make that much on a mortgage, but that was the nature of the industry at that time. Wow. So you didn't have to do a ton of volume to make really good income at that time. But then we all know what happened. 2007, 2008, things just crashed and came to a screeching halt. So I was no different. But the difference for me was I just hadn't been spoiled long enough for that to take me out of the game.
Yeah.
Just made you had to get a little more scrappy.
I love that. So what did you do when, lack of better words, shit hit the fan? Like how did you scramble? How did you pull out of it? What did you do?
Well, I was lucky because I had a brother in Rexburg who had a really great thing going with summer sales guys. Pinnacle Security was the name of the company. They needed some help with just managing the sales guys and their numbers. And they all have to keep track of sales numbers. And then at the end of each year, they reconcile those sales with cancellations. And then there's a big payout. Mm. They just needed somebody that was good with spreadsheets and could help manage that process with them. And so he offered me a job with a salary and a benefit package and everything, but also allowed me to continue to do mortgages on the side. So that really helped me weather those. I mean, there were months where there's just no loans. There's just no one buying anything.
Right.
You were not in the business at that time, but you were.
Yeah.
Like,
sucked.
I don't think I did a purchase transaction for like a year and a half. Because when the mortgages finally came back, it was all refinance business. It wasn't.
Yeah, of course.
Right.
It wasn't really purchase business. So it was really, I owe him a lot to allow me to just survive through that and not have to give up the mortgage business, because I may have had to if that was all I had.
Yeah.
But I was able to keep some steady flow of business going through those times. And then on the other side of that, as rates came down, the refi boom started through 10, 11, 12, and then purchase business started coming back strong. And it was just kind of an uphill trajectory from there.
Gotcha. That's awesome. I love that you pointed out that, I mean, to get started, right? We bring agents onto our team, and real estate and mortgages have, very similar, I mean, really anything does. But when you started, it's not a 9 to 5,
right.
Like you can't be thinking of it as the Matt, who we were just talking about earlier, Matt Chick, he mentioned the other day on social media, he's like, maybe quit treating it like you're an entrepreneur and maybe start treating it like it's a job. And so if you're not making any money, you're going to have to work more.
Yeah.
And so that's where I struggle sometimes with agents or lenders that they're like, wow, how come it's not working? I'm like, you worked 30 hours last week.
Yeah.
Like if you really want it to work, you really got to put in the time and
I think people don't realize that. I think a lot of people, they go into things thinking it's going to be like a job, right? It's going to be like, I'm just going to check in and check out. And it's real estate, so I'm a little more flexible with it. And so they don't realize that I'm actually only working. Like I might be at the office, but I'm actually only putting in work 2 hours a day.
right.
And then they expect to make double what they were making before at their other job. And it's like, well, that doesn't really work. You've got to get that boulder rolling down the hill. And to do that, you got to put in a lot of effort the first couple of years.
Well, I never heard it stated that way, because a lot of people that do jump into our industry, whether it's in our business, it's 100% commission most of the time, unless you work for a bank or a credit union. But for real estate agents, like, this is your own business. And if you treat it like a 9 to 5 or an 8 to 5 with a lunch break, like, you're probably going to be real successful. But what was the reason they got into it in the first place?
For the time.
For the flexibility, for this freedom of time. Well, guess what? You don't get that freedom of time until
you build it.
You build it and you're a success. And the only way to build it is to put in the time, and it can't just be 8 hours a day, honestly.
And Andy Frisella, he also social media. He was talking on his podcast, and he's like, people get into it because they want time, and he just goes off on, you don't get Christmases, you don't get these things because mentally, like, maybe you're taking the time off, but mentally your mind is still wrapping on. And Jason and I talked about that yesterday, is that after a while, your mind is just constantly, maybe it's loans that you're doing, maybe it's projects you're doing, maybe it's, where do I put this or move this? Like, it's always just a constant grind. And so, I love that you said that, because I think that, the Success Blueprint podcast is for conversations like this of a lender, which is, similar to real estate agent where the entry is very low to get in there. And so everybody's like, man, Landon's super successful. He's doing this and this and this. Yeah. If he can do it, I can do it. Yeah. But they don't realize the journey and the pathway to get there is not always awesome. Working double time, working your tail off, 2 years later, the business goes gone because of the economy. Yeah. And so then you're picking up another job and then you're cruising right along. But what is some differences that you see in today's market and being a lender now versus before? Or what is some of the changes you've seen?
Well, I think the biggest change that I've seen is with the entry. I filled out an application that was 1 page and sent it to the Department of Finance, Idaho Department of Finance. It was a 1-page application. I had my license 24 hours. And so, as you can imagine, a lot of sketchy folks were in the mortgage business because that's all it took. There was no background check, no credit check. Now you have to take 20 hours. It's still not that big a deal. It's 20 hours of pre-licensing education. I always recommend people take some course test prep courses just to prepare them for an exam that they've never seen this type of exam before. So it really prepares you on what kind of questions. And then you got to go pass a national and state exam. And as soon as you do that, it goes through this nationwide mortgage licensing system, and the state of Idaho will review it and approve the application. But so that part of it's changed a ton. I think it's a little bit of a barrier to entry, but really, if you can study and take a test, most people can pass and get their license.
Right. Yeah.
But the business itself, getting business is just not that easy. I mean, we had a nice 2.5, 3 year stretch where if you were in the business, you were making money because everyone was getting a mortgage of some kind.
Under 3. Right.
Yeah, interest rates down in the 2s, 3s. Yeah. If you could get a refinance done in a reasonable amount of time, someone was going to have you do that for them. But since then, it is now back to what are you going to do to create business for yourself? And that has never changed. It's the same business as what you guys are in. It's about a network. How are you going to build and create this network of people that are going to be quote unquote raving fans that say anytime they hear someone needs a mortgage or a real estate agent, they think of you.
Right.
You have to create that. And how do you do that? Those I don't think have ever changed. It's constantly being in front of people, introducing yourself, telling them what you do and how you do it, and then hopefully someone gives you a chance. And then once they do, knock it out of the park.
Right.
So
I love that. And when you talk about that, I think you're somebody who helps out a lot just in your community, and people know who you are, and I think that's a big thing too. We meet people, and maybe somebody, comes into one of their kids' sporting events and do a gym, and you're like, man, who is that guy? And it's good to have that presence, or to be able to be that type of person that somebody asks about. Who is that guy? And usually the next thing somebody says is that's their name and this is what they do for work.
Yeah.
Right.
Yeah.
And so you do a great job at that of just being a good, solid person and being well liked and well known. So,
well, it takes time too. I think people that are just getting into the business and see someone like us that have been and doing it for 20 plus years, they think it just happens overnight, and it's just not the way it is. You have to. Now, I don't have to do the same things at my stage of my career that I did 10, 15 years ago, because when you build a network, and we use CRMs just like real estate agents do, right? And you're constantly out in front and touching people one way or another. Business will flow kind of at whatever level you want it to flow.
Right.
And so, yeah, I can kind of just sit back and calls will come. But someone that's just getting into the business, that was built over 20 years. That didn't happen last year.
It's a 20-year overnight success.
Right. And so for someone getting in the business thinking that people are just going to call them to get a mortgage, it's just not the reality. So you have to go get it.
So you growing your team and building your team, Jason and I are in the same boat. What is it that you encourage your new lenders to do?
Well, I just encourage them to do just that. I did this thing where I listed, I think it was like 400 people that I knew. This was friends, family, people I went to church with.
You knew 400 people. That's impressive.
A
lot of people know, like, they struggle to get 50.
No, I know. But that was what I was challenged to do at that time, is come up with a list of 400 people.
Cool.
And send out an introduction, because they may not know or remember me, but obviously you got to find their addresses too. But I sent out a mailer, told them exactly who I was and what I'm doing. And I would really appreciate if they needed a mortgage, that they would support my business.
Right.
So you're asking. And, I don't know whatever came of that, but at least it got the word out what I was doing.
Yeah.
And then it's just starting to build a network. And I think that's the biggest challenge right now, is how do you as a new loan officer go to all these agents in our marketplace and introduce yourself and get anyone to give you a chance, right? Because most people have their referral partners and the people that they trust with their business. But I tell them, like, look, what most people are looking for is someone that's hungry. Because if you're hungry, you're going to do what it takes to
return phone calls.
You're going to return phone calls.
Yep.
You're going to answer text messages. When you get a referral, you're going to call that person within 5 minutes. You're going to follow up with that person. You're going to follow up with the real estate agent and let them know what's going on. They know. And so the hunger part of it, I think, is a big deal. And so if you can somehow just get people, whether it's through going to lunches or visiting their office or going to an event of some kind, just getting them to know, like, I'm really hungry and I'm going to take care of your clients if you just give me one chance.
I love that.
That's kind of the key, right? Just giving them the opportunity.
Yeah.
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 And then
that opportunity is hard to get.
Yeah. And then hope that opportunity doesn't come with a lot of hurdles.
Right. It will. And I told them that. I was like, you're going to get the worst. Like, you're going to get the hardest deals, because they're going to give you a chance with not the slam dunk, 800 credit score borrower with 200 grand down. That's going to go to the lender that we've always got, done business with. You're going to get the really tough one that may not qualify right now. And you're going to have to nurture this person along for a little while.
Yeah.
Well, and when you say that opportunities are hard to get, it is true. And then when those opportunities come, I mean, you better work your little tail off and to make sure that, you start it and you finish it. And so whoever gave you that opportunity can see exactly what it is that you did.
I think those hurdles, though, a lot of times are the chance to build real relationships, right?
Yeah.
Like, they give you a chance, you knock it out of the park or whatever, great, but 2 or 3 other lenders may do the same. But then you have a big one that's difficult, or someone that doesn't qualify. I know when I very first started, there was a lender that I got introduced to or whatever, and he gave him a lead. They were not qualified, but he had been following up with that person every month, and every month he followed up with them. He followed up with me saying, this is where they're at. And over like about 6 months later, they were qualified. And he's like, hey, they're ready to go. I wanted to give them a call. I was like, that hurdle built up a lot of trust between that lender and myself, right? And I was like, man, if he's going to do that, why not use them more?
Right.
Why not use them more?
But if they can take care of the hard ones, you know that they're going to take care of the easy ones.
Exactly. Well, if they're going to take care of it, not only take care of them, but get them in a place, because not just be like, oh, you're not ready to go now. Okay, bye. Call me when you're ready. But actually touch base with them. How are you doing on those things that we gave you to take care of when we pulled your credit? You need this, this, and this, and this. How are you working towards those? And that little follow-up with them, I don't think that client would have been in the place to buy 6 months unless they had done that. And I wouldn't have known about it unless they had done that. And so sometimes those difficult ones, they're difficult in the moment, but they can gain, that's when you gain loyalty.
Well, it makes me think of, back 20 years ago, right? I remember, when did you go over into the in-house?
That was 2015.
2015. Yeah. So that was 11 years ago, right?
Yeah.
So I remember.
That's just after I got into the business.
Yeah.
I got into 14. So I was
first time home buyers were 100 grand and below, right?
Yep.
So I remember you and I working together, and I remember calling and being like, all right, look, this isn't the biggest deal in the world. This person's buying an $85,000 house. I need you to work really hard on it, right? So when you look at that, nowadays, the commission, I mean, it's $2,400.
Yeah.
And when you're trying to sell 40 of those to make a living, like, it's crazy of really how small those bites we were taking.
Yep.
And so I remember, you being able to take care of those clients and being able to work really hard. And I'd say, I know this isn't a lot of money to you, but this is going to be big for me because this is somebody's son, or this is, this type of transaction.
Yeah.
And I think when you've done that and you did that it creates that trust over years of, you just kind of remember that of, but now, I mean, a first time home buyer, you're still going to make $9,000-$10,000 off of it.
Right.
And so, but it's a hard thing on that. I mean, it's just because there's a lot I don't think, folks listening, not in our realtor world or lender world, that they understand really how much goes into it.
Yeah.
And even at a $10,000 one, I mean, there's a lot that now you've got 2 decades backing it. So are you making good money on it? Yeah, but 2 decades of the knowledge to get there, of the right things to do, of how to make it easier and how to make it work.
Yeah.
Like you could go do it less with somebody else, but are you getting the same quality, the same loan, the same thing that you're going to be paying for on the next 30 years?
Right.
Yeah. Yeah. Problem solving is huge. And having somebody with that backing and that background makes a huge difference. Because I don't know, it seems like there's always some hurdle or something.
Well, I want to go back to your point that you said about that small loan or small deal. I'll be honest, when I get a phone call from somebody and they say, yeah, I've got this house under contract for $450,000. I just sold a house. I'm going to be putting about $400,000 down. So I need a loan about $50,000. Because it's the same amount of work.
True.
It's the same everything. But some agent had referred them or whatever. You can't say no. You just can't treat those any differently than you do the $800,000
or a fully 5% down on 450.
Exactly. Yeah. And there may be the 100,000. Well, not anymore. I mean, I had a deal that was like a $285,000 house. It was a $70,000 loan. They were an older couple, really challenging to work with because they don't do technology and they were in another state. And how do we get documentation back and forth? And they were frustrated with.
Do you have to break out the fax machine?
We didn't break it. Well, I didn't break out the fax. I gave them my fax number. They went to Staples and faxed a couple things. They actually overnighted some documents. We're talking bank statements where you could probably just call your bank and give them an email address and say, can you send my statement? You know what I mean?
Yeah.
But it was, and they were actually really tough people to work with, like always complaining, just someone that you just wish you could say, you know what, I have been doing this for 20 years and I don't want to do business with you.
Right.
But then there's the agent on the other side who trusted you with those people, that if you said no, then they have to go to some other lender that may not be as great of an experience for the real estate agent involved. And so you have to treat those all the same, because if you can just hit enough singles, and I think that's my point, is sometimes you just got to hit base hits.
Yeah.
And then eventually those doubles and triples and home runs will come if you just treat those singles the same way.
Well, you talk about that, and I think that's the difference of treating a client or an agent as a transaction versus a relationship.
Yeah.
And that's where, the beginning, that's where I was getting at, is it wasn't a transaction. It was like, okay, well, I know that more will be coming down the pipeline.
Yeah.
More will be coming down, or maybe this person's like, man, maybe they know they're hard to deal with.
Yeah.
And then they're like, this guy actually did a really good job.
Yeah.
And so.
Yeah, I've definitely gotten more referrals and more additional business in aggregate, of course, from people that I struggled working with than people that I had just an easy relationship with and that everything went through no problem.
Yeah.
You know, the ones that were more difficult, we had to jump a lot of hurdles and things like that. And they weren't happy at the time and that, but as you go through those, you get to know each other a little better. The relationship comes. And then at the end of the day, they're like, man, they were awesome. Yeah. They stuck with us the entire time and made it happen, you know? And so, yeah, sometimes the difficulty it creates that bond a little bit, right?
Yeah, for sure. And I think as you explain along the way, like, hey, I just want you to know why this is a challenge. It's not you. We're not picking on you. And you really help them understand. They may have complained the whole time, but when that loan or that transaction closes and they look back over everything that you did for them and help them get to that point, they realize, yeah, that was actually really challenging and difficult. And they did it with a smile. They were still nice and kind to me. Yeah. Even though I was not so much to them. Then I think you're right. I think they're like, man, this guy is my guy for forever. And I'm going to tell everyone else about him.
So people coming to you now, what are the biggest, I guess, I don't know. I mean, loans constantly change, right? Yeah. I mean, obviously the programs change, things like that. But in general right now, what would you say maybe some of the biggest mistakes are when they come to you thinking they can get a loan or trying to get a loan? Or what would you recommend for those people, even first, second, third homes, like to come prepared with as they talk to you?
Yeah, and I wouldn't call this a mistake because it's really not anybody's fault, but the economy that we're in.
Okay.
You know, COVID stuff, all the inflation, I mean, it drove up housing prices. The affordability is our biggest issue, right? Okay. So when somebody comes in thinking that they just landed this great career job, let's say it's making $70,000, $80,000 a year, and in our market, that historically has been amazing money.
Yeah.
And they come to you and try to get a mortgage, and that doesn't get them anything in the marketplace that's worth living in.
Yeah.
That's really discouraging for them. So it's not a mistake. It's just the lack of expectation. What does my income actually buy in the market that we're in? Yeah. It's a combination of higher values, higher prices, and higher interest rates that are stubbornly staying elevated.
We talked about that a little bit of just the planning. Yeah. You know, when you're moving to Idaho Falls and you get an offer, review it to see exactly what that gets you and how much money do you need to have whatever lifestyle it is.
Yeah.
Yeah.
Because it is tough and it has changed. In the last 5 years, I mean, I'm adapting to it as well. Like it has changed. You know, our average sales price double.
What is it right now?
It's
about $430.
$430 average sales price. Yeah.
That's wild.
For the whole area.
It's wild.
So. And pre-COVID, it was $280, $260?
Yeah, it was right about 300 and like 18. Like 18, 19. So
that's a hop.
COVID hit.
That's a big hop.
Yeah.
And wages haven't done that.
No.
It'd be nice if wages doubled like that, but it just hasn't. I would say majority of my first-time home buyers that are getting into the market are going to have two people with incomes.
Yeah,
you know, it's not a single income household market anymore for the first-time home buyer.
Yeah,
and so a couple with no kids, both of them working full-time, they can get in the market, or you know, someone that's just got a really great job. And there's great employers in our marketplace. There's great incomes where a single income earner can make it happen. But it's definitely that I would say is the biggest hurdle. You have to just kind of help people navigate that and hope that they don't just get so discouraged that they run and hide until. Yeah. So it's an income thing or it's a debt thing. Debt is another.
We were talking about that a little bit.
One.
Are you seeing that? So from our perspective, it seems like I know a lot of people that have $1,500 or more just in car payments.
Yeah.
You know, and so is that increasing or is that just a perception that I have?
No, it's increasing for sure. You pull someone's credit and you see 2 or 3 auto loans on there, and these auto loan payments aren't small.
There's no small.
These are ginormous. They're ginormous.
Payments now.
Yeah.
These are payments that used to be mortgage payments, right? And so, I mean, I've got people coming in who are super excited about buying a house. They're making great income. and they're driving a $150,000 pickup with a $1,700 payment. I was like,
Wow.
well, you just ate up a big chunk of buying power in that truck.
Right.
It's a cool truck, but
I think this is one of the most intriguing things is financing and just the money world and the language and understanding money. You have 10 kids. What do you teach them? I mean, they're in college. They're all throughout. So you got young ones, you got old ones. What is it that you teach them now seeing it, and what do you got?
Well, so all I can do is share my experience, and they don't care what their dad does, really, honestly. Like, that's what I've found. No one likes what I do. No one's interested in pursuing what I've been doing my whole career, and that's fine.
That's their fallback.
Yeah, exactly. I got 2 boys that are playing college basketball. So right now their focus is how much money can I make playing this game? Because college athletes can make absorbent amounts of money while they're in college.
Right.
So that's a little bit of their focus, but I've told them, like, hey guys, like, basketball may not pan out like you hope. I think it can. Like, I'm a big believer in setting your dreams and shooting for them and let's go and do what it takes. So I think it will happen, but if it doesn't, like, are you taking your schooling serious and academics and all that stuff? And it's not because a degree is going to do much for you in our economy. It just a bachelor's degree doesn't do a whole lot. But what I think it does is it creates habits of, just like the old saying, the way that you do one thing is the way that you do everything.
Yeah.
So if you can tackle your academics the way that you tackle your basketball training, the same way, you're going to tackle whatever career choice you make. Or if you want to be an entrepreneur, great. I think that's probably what you should do, because I think that's where the money can be made, and anyone can do that. Well, if you have bad habits in basketball, bad habits in academics, you're going to have probably bad habits as an entrepreneur.
Right.
Yeah.
So just tackle whatever you're doing, just do it the best you can and tackle it that way. And I guess that overall is the theme that we try to instill in our kids.
So how do you relate that to finances and debt and?
Yeah, discipline, right? I mean, when we talk about, because they give me a hard time. This was a conversation last night. Dad, do you think you'll ever, while we're still in your household, ever have a surf boat? I have nothing against surf boats. I'm a water skier.
Okay.
That's why my knee is injured the way it is. But
water skiing, that's
water skiing.
Not even wakeboarding.
It was a equipment malfunction. But so I love my ski boat. There's no wake. It's small.
Yeah.
Right.
It zips, and you can water ski great behind it. And all my kids water ski, but they love to surf. They love to do just get out on the boat with 20 people and have a great. And I'm all about it too. I have got a brother-in-law with one, a brother with one, and we have a great time when they're around. But when they're not around, we just got my little pansy boat that they call worthless boat. And so my oldest son, he just nonstop grills me on this. He's like, yeah, he'll never buy one. Well, I mean, I could buy one, but it's $250,000. Like, it's just, I don't know. I think that part of it, like, just even if you can, should you?
Yeah.
I mean, I think you should enjoy your success and wealth and stuff, but that is, so when we're talking finances, and I said, the only reason I am in a position where that is possible is because I sacrificed not buying that surf boat on a 20-year loan with an $800 a month payment.
So on our last, I don't even know if it made it on there, but it'll make it this one. But I was talking to our last guest, Brandon, and when I was in high school, I asked my dad. I was like, how come you don't buy a sports car? How come you don't the one I remember was, how come you don't buy an airplane? And he's like, the reason why I can buy an airplane is because I don't buy an airplane. And
That's
I was
exactly
like,
right.
well, and I told him at the time, I was like, that makes no sense. And he's like, it makes absolutely sense.
It makes
If I
no
just
sense
bought-
to a 20-year-old, I'll tell you that.
If I bought everything I ever wanted, then
I wouldn't be able to buy everything I ever wanted.
yeah, I wouldn't have any money. And
So when does that change? I guess that's where I'm struggling right now. When can that shift happen? When you've done all the things that you were supposed to do to put yourself in a position to be, and I don't think it's a number for financial freedom. I think it's a time freedom that when you have enough money working for you or projects.
For two things that I think changed in my life is one, when you really start paying for everything. My wife and I talked about this like 2 weeks ago. Like, I can't wait till my kids get excited to go on a date with their wife to Salt Lake City for the weekend. And then they realize that their car needs new tires that cost $800. And $800 is probably pretty generous for whatever, but say $800. Like, that's a downer. And then you're like, just for rubber on the car, you know, like that, how many dinners or what would, like, that's not fun.
Yeah.
And so when you start realizing that, but I've also started just telling people, like, the things that I've done in my life, I wouldn't say that I made more money than all the real estate agents. There's a lot of real estate agents that have always made more money than me every single year. But earlier I realized that the chase was not going to be a long-term thing that I could like mentally handle, like, or wanted to. And I thought, I need to figure out how I can create 2 or 3 or 4. And now it's grown to 5 or 6 Morgans that are going to be producing money for me. So I tell them, I'm like, I just started buying things because I'm terrible with money and I knew I'd buy the boat. So I just started buying properties and just started buying them and drove the same car, you know, throughout my 20s and half of my 30s because I was like, I didn't want to do it anymore. And the pain was there. And I knew that the future wasn't going to be bright. So I just invested my money. There's a lot of agents that made a lot more, spent a lot more.
Yeah.
And I just started shoveling it away as much as I could, knowing like, because we've been there. We make a lot of money. 2 months later, it's like, man, where did it all go?
Yeah.
And so I just got tired of that pain.
Yeah. So when's the shift? When can you start really enjoying the fruits of your labors? Like, that's where I struggle because it's so inbred in me now. Like, it's so ingrained, this concept, that I just want to keep building.
Yeah.
You want to see it, like, no matter what the number is, you don't want to see it go the other direction. And so it just keeps building and building. And so at what point can you really start buying the surf boats and
well, I think it shifts a little bit too. And I don't know when that is. I mean, I've got a grandkid now and one on the way, and it's like, okay, I don't know when that shift happened in your mind or whatever, but I think there is a shift at some point when it's, okay, what is that surf boat going to bring?
Yeah.
Like, is it going to change and bring more time with my family and more time with the people I want to be with, or a totally different experience? Or is it going to be kind of the same experience, just on a nicer boat?
Yeah.
You know what I mean? I mean, and so,
I like that.
And what is that? And I think that it just shifts of your priority. Is like, it doesn't really matter. I mean, you do want to keep building that and building that and building that, but what matters is that time and those relationships and things like that. That's what matters.
Yeah.
I mean, I think, and I don't know when that shifts. I think in my 20s, that's the last thing I was worried about. But as you grow and as you kind of build that and as you see things, I mean, that's when it's like, okay, it's kind of all about the relationship, the people you care about, you know, and the people that care about you, right? And are you spending time with them and are you focused on them?
And I think you've seen a lot. And you have a standard built in, and you're probably never going to buy a $250,000 boat because you know how much it costs, and you know that just what it would take for somebody to be able to buy it and pay for it, and if they were even in a different occupation than you, and you'll probably just won't because it's probably one of those things that you're like, man, I'd rather put a down payment on a cabin, or I'd rather go do something like this or something like that and go rent a boat.
Like, how many opportunities come across your desk because you've participated in other things, whether it's a project or an investment pool or, these syndications or, whatever. I love doing private lending. I love the ability to help somebody with a loan that they just can't get traditional financing. It's a win-win. It's high interest, right? So it's a win for me and it's a win for them because somebody's willing to give them a loan that nobody else would. I love that. So if I spent $250,000 on a boat, that's $250,000 less that I could.
Plus the interest that you could lend it out.
Correct.
So it's not just $250,000, but if you're lending it out at 10+%, which you are, now that's a $275,000 boat, or the missed opportunity, then that's a $500,000 boat.
Yeah. So when can you stop thinking about the opportunity costs of?
I don't think you ever
those
will.
memories. And I think Jason just gave me permission to buy one. I have 10 kids, and all they want to do is be on a boat. And if that's the way that I can have my kids surrounding me and spending time with them, maybe that's
that just got us 10 more viewers.
Maybe we're headed to the Malibu
10 more
likes.
There you go.
You should call and see if they take referral.
They will. I will give you all the credit.
No. But it is funny how just things shift as you grow and as you kind of learn things and that, right? And if it does create a totally different experience and more of that, then maybe it is worth it.
Well, you've done that in Island Park yourself, right? You bought a property. You probably have created some unbelievable memories with your family up there.
Right.
But it's also a phenomenal asset that's worth way
something
more
that's
than
increasing versus decreasing.
It's accomplishing both of those goals.
Yeah.
It's increasing your net worth while at the same time bringing your family
it's something
closer.
that I mean, I'm like you, is the difference between an asset and a liability.
Yeah.
I'm like, they don't understand that. But I'm like, my kid's, he's 16, and I'm like, when you're 40, I want to give you something that's worth something. If we were to buy a boat or we're to buy something and I give it to you, you're not going to be too excited if that's all that you got.
Right.
And so, but definitely I would say that memories and things like that, because that's the other thing though, is boating has always been your guys' thing.
Yeah.
And so, there is some things where that I do think if you are in the position that you can do it, to build those memories and to do those things and the sacrifice and help them buy into maybe the buying process and what it takes to get there. So they see the full picture, not just the summer day on the boat with their friends.
Yeah.
Yeah. It is interesting though, as you think of it that way. I think the assets versus liabilities is huge because a lot of the toys, obviously, they're going to depreciate the second you buy them, right?
Yeah,
but if you can do something like a cabin or something like that, where you can still create memories, but have that, then it can accomplish both. They're not necessarily one or the other in a lot of cases.
Yeah.
But
love it.
Yeah. That's cool.
So we've talked about that. So first time home buyers, dual income, buying in. If somebody's looking to purchase a home in this market, we get conflicting ideas from what people are saying and what people want. What are you seeing, and what's your advice, and what's your opinion on that?
Well, I still think people should buy if you're in a position to do it. And look, I will always argue that most people that have been pretty fiscally responsible will qualify for a lot more house than they probably should buy. And so, when I'm pre-approving somebody that's excited about getting in the market, that's the conversation we have. Is like, here's what I'm going to do for you. I'm going to get you a ceiling, which is basically here's what your buying power is. That doesn't mean that's what you go and buy.
Yeah.
What we're going to do is give you a ceiling that you can then shop for below that. But at the end of the day, you've got to then guide and direct me on what you're comfortable with. What is your budget?
Yeah.
What is your, we're working off of gross income when we're qualifying people. It doesn't matter. It's matter what's actually getting directly deposited into your bank account every month and how much of that can go to a mortgage payment. And only that person's going to know that. And so let's figure out what that number is and then back that into a house price. And sometimes that exercise results in the same discouragement as the other person that couldn't qualify for what they thought they could. It's man, that's not going to work. And then they have to make decisions, right?
Yeah.
As they go out with their agent and shop around and see what the market has, they got to decide, okay, maybe I do sacrifice that extra vehicle payment and maybe we don't eat out. Maybe we, do some of these things so that we can get
Budget a little more.
into this market, because I think we all know that the window is bigger than we thought it was going to be as far as how long this elevated rate market would last. And with that elevated rate market, we've seen prices maybe soften a little bit. Builders incentivizing people to buy homes. I think a buyer should take advantage of that while they can, because when the rates do come down, and we know they will, we can talk about all the reasons why they're still up and what's caused them to do this and that, and the Federal Reserve. But at the end of the day, we've got an administration that wants lower interest rates. And I don't know, if you watch the news, they tend to get what they want. How they get it, is it right or wrong? Those are all debates, right? But we're going to see lower interest rates. And when that happens, I mean, there are so many people just sitting on the sidelines.
True.
And that pool of people is just growing month after month after month. It's been going on for 3 years.
So you don't believe that we are in this housing surplus, because that's what some of the people are saying, is that there's going to crash because we have all these sellers.
You guys would know better than I would based on
agree
inventory.
With you, by the way.
But I mean, there's not going to be enough houses when rates come down.
No.
There's not. So
and that pool is huge.
It's ginormous.
People are graduating from high school
every year.
They're
graduating from college every year.
Yeah.
They're starting career jobs, and they're renting.
Yep.
Or living with.
Or the people that started they bought their first home 4 or 5 years ago.
Yes.
They're hoping to get out of it 2 years ago, but couldn't. And they're just waiting to get into that next
2 or 3
step,
kids.
that next bigger house.
They have to get out of it.
Yep.
So there may be a nice surplus of inventory from those that are then looking for the lack of inventory,
right.
Because it hasn't been built, and you can't blame builders for not wanting to go crazy.
But around here too, because I mean, we'll have people listening from other markets, but here, right, we know that market well enough that there will be a frenzy.
Yeah.
Yeah.
And prices then, just like before, are going to go up, and it's going to be. So I agree.
We're growing
with you
in
100%.
population, not diminishing. So
Yeah,
we're
still
gonna see
growing.
that.
And that's not a fun place to do business in. I don't know.
No.
I mean, I would imagine we all are excited about a frenzy just for business sake, but transactionally, it's a nightmare.
It is.
Multiple offer situations, asking over, offering over asking price.
Praying appraisals come in.
Hoping appraisals, which they won't for a while because it has to catch up.
Yep.
And so just not fun for sellers. It's not fun for buyers. It's not fun for. So if you can do it while you can take your time, make a good solid decision.
So I always use the analogy of, like, if you take a racquetball, and so this was back before when, say, you can use it with prices drops or you can use it with whatever. But if you drop a racquetball and you try to time it, you're going to time it exactly when it hits and it's at the bottom of the bottom. When that happens, it's going to start going back up, right? So everybody's waiting for these rates to come down. And the one thing we can control now is the prices, because that's where they're at.
Yep.
But if rates come down, then you can refinance, or you can get into something that maybe doesn't even cost a lot of fees to do it.
Yeah.
But if you're waiting, and my feeling isn't going to be dropping the ball, it's going to be slamming the ball this time, because that pool, I believe, is so big that it's going to go up. And you're going to miss out on your payment. It's not going to take much. And Jason and I talk about this all the time. It's not going to take much for it to adjust your payment $200 or $300 when your interest rate goes down a little bit, but your purchase price goes up.
Yeah.
Yeah.
And so
You're going to be at the same payment.
Yeah.
That's what I tell people. Like you see, let's say it's a $40,000-$50,000 increase in price, but a 2% rate drop. That's the same payment.
the people who did the best,
Same payment, but you owe more.
Yeah.
You owe more.
You owe more.
Yeah.
And so
Yeah.
wouldn't you rather have a lower principal that you can actually refi later on? I don't know.
Yeah.
And that's exactly right. The people who won before with the low interest rates were the people who bought, who've owned, who've whatever, and then refinanced into it.
Yeah.
Yeah, those were
Yeah.
the true winners.
They were the
For
ones
sure.
because they got the low rate
Yeah.
and then
low
they got the
price.
low price.
Yeah. Because there are some people that got the high price and low rate and are still sitting, I don't know, maybe net negative equity, but not great.
Right.
Yeah.
So
It's true. That's awesome. Well, cool. Well, I'm excited. I think, what do you see as far as either in your kids? I know you love basketball, and a lot of your kids have followed suit, and they love it as well. So you've been around it a ton. So I guess, what have you seen that relates obviously to business? I think sports always relates to life in general.
Sure.
So what do you see successful kids versus non-successful kids? I mean, not your specific kids, but just in general.
Yeah.
What do you see the differences? What do you see happens to make those kids a little bit better than the other ones? Not just natural talent, but just what sets them apart.
Yeah. So this is why I love sports and athletics so much, because I know what it did for me. I know the habits, the work ethic that it created in me, the overcoming obstacles and adversity. I mean, sports has it all. It really does. And so that's why you see a lot of employers love collegiate athletes to hire them coming out of college, because they know what they're gonna get as far as work ethic and being able to handle tough situations, high pressure situations. But when I think about my kids, or because I watch a lot, they're doing a lot of tournaments around the country, and the athleticism, like that's just is what it is, right? You're born with it. Some people can then create it, and I have actually seen people get amazing stuff out of their body that maybe was not naturally athletic. But it's really about work. It's about putting time. I mean, it will always blow my mind when we come back from a break, like just talking about like the high school team, right? Coming back from the season ending, and then we start summer basketball in June. And just the horrendous basketball that I have to watch for a few weeks, because most of the kids haven't touched a ball since the season ended in February or March, right? But they want to be good. They want to be they want to start for the team, and they want to, be one of those main people that play. And the same thing happens. Summer's over, like the summer block of 5-6 weeks, and then they don't touch it again until October, November, when the tryouts are coming. So it's really about consistent effort and consistent work. I don't think you always have to be playing in games. I think you should be able to take a break from like what basketball really is, or what any sport you're doing, competition. But I think there still has to be work, still some ball handling, getting shots up, free throw shooting, and then being in the weight room, staying in somewhat cardio shape, so it's not a shock when you go back, right? Yeah. So it's just that consistent discipline and effort and work. And that translates to everywhere.
Absolutely.
So
I love that.
That's what, I don't know, we're a basketball family, and so a lot of people say, yeah, they just are so naturally gifted. Actually, no, they're not. We are not naturally athletic. I'm slow. My wife's slow. I can't jump. I'm 6'5", dunked it a handful of times. You know what I mean? It's just, we're not giving our kids any advantage physically or athletically. But man, they love it, and they put the time in, and it eventually will show up on the court. So
that's awesome. I love that. Yeah, I think that's so true in everything, right? I mean, and in real estate, and you probably see it again in lending, is you see people come in, and the ones that are willing to put in the effort do well. The
100%.
ones that they might have all the talent in the world of speaking with people and that dynamic personality, but they're not willing to make the calls and make the effort, and they just can't get it going. Yeah, we see it all the time.
And then it's a little bit of a victim problem, right? It's someone else's, because I have all the talent, I have all the charisma and the ability, but it's not happening. So it must be someone else's fault that it's not happening. but it's not. And then you get the less talented, hardworking people that just go out and kill it.
Well,
and imagine if you have both.
Yeah.
Oh yeah.
That's when you skyrocket.
Occasionally you see both, and they just it's amazing.
When you realize that you're responsible for your whole life.
Yeah.
That's what my kids are younger, oldest is 16, and that's why I'm like, the day that you realize that you're responsible for it all, and your bad things are going to happen that are not in your control, but you're responsible for the way that you react to it or overcome them or do those, because the bad things they're gonna come. You know, you're gonna get kicked in the teeth. It's just how many teeth are you gonna lose when that happens? How are you gonna be able to?
So I have a question for you both, because I'm at this stage. So you want your kids to be successful. You don't want to see them hurt. Like anytime they hurt themselves, we're right there helping them. In life, that's going to happen too. They're going to get knocked down. So at what point do you as a parent say, I'm not bailing you out of this one? Or, you know what I mean? Like where they have to just kind of have that attitude. It's on me now. I got to figure this out.
I think the sooner the better.
Yeah.
I mean, my wife and mine was probably a little too soon for what she would want, and she'll probably nurse them until the day they die or she dies. But I mean, that's what I think is just, you have to, I mean, I kind of had both. I mean, my dad wasn't super hard on me, but I also struggled because of it. And he did really well, and he had to work like a lot of terrible jobs and had to work 2 or 3 jobs at a time, and so he didn't want that from us, and so he kind of shielded that from us, and I can tell you that I mean it was hard. I felt like it created more anxiety and stress in my life because I had to figure out, what's going to happen, because the wolves are going to come. You can't protect it from all of them. You can only protect from these situations, and that's where. I tell my wife, I tell my kids, like, I had to learn a lot on my own, and I wish he would have been harder on me. I wish he would have had, I would have had to been more accountable, because those are all things I had to learn when I got older.
Those things are definitely easier to say in hindsight, right?
Yeah.
I mean, at the time, you're probably glad that he didn't do it, but in hindsight, it's like, oh man, I would have learned a lot of lessons when the consequences were less, right? And so the younger you are, those consequences are usually smaller, right? And as they get older, if like the first time you're letting them fail is when they're 25 or 30, the consequences are a lot bigger than if they're failing at 10, 11, 12 years old. You always hear of Simon Sinek talking about that, right? It's like, we're the ones that created this. Like, talking about how weak employers say, oh man, this generation or the younger kids are just weak. They don't know how to work. They want to be at the top without even doing the work. They haven't realized it. They've never had to fail because everyone just picks them up and just makes sure they don't ever fail.
Right.
And he's like, so we're mad at this generation, but we're the ones that created it.
Well, here's where the dissonance comes in for me, because what was one of the biggest things that I learned from that Millionaire Mind is having your purpose and your why as to why you're doing something. So I created that. I put it up. My family was my why.
Yeah.
So when your family is your why, you sacrifice and go to work and try to be the most successful you can. What are you trying to do for your family? You're trying to provide a life that you may not had when you were their age, right?
It's true.
And so you're trying to give them things that you didn't have, and get them in a beautiful home that you maybe didn't have growing up, and have things and do things, travel. So yeah, we are creating it because for me that was the why in the first place.
Yeah.
So that's where a little bit of a disconnect for me is we're trying to create this amazing world and life for our kids, but then while we're doing that, we're actually creating monsters.
So
no, they're great. No, we're just creating a weaker.
So a couple of things on that, like what Jason said though, is I do believe this is true. Would you rather your kids struggle like going to college or being out on their own, or would you rather them have some struggles while they're at your home?
100% at home.
And that's what I, try to tell my son, like, dude, this is just how life is. And I know you think I'm mean, but I'm trying to, maybe it's put some artificial pain so that you can see what it is, because I'd rather you struggle here and have a bad day or have to, be frustrated or whatever here instead of when you have all of those things. And then the second part of that, one thing I felt like my dad did better later in my life, in my teens and 20s, is he included me in on things. And so I could see how things were running and how things were working. And so like you do really well at the duck effect of where you look calm on top and you come home and you do a great job, but they don't see all of the things going on beneath the surface. And if you can include them on things, so they're like, whew, this is hard. Like this is tough. Like, man, like this is, or when they start trying to make a salary and they're like, whew, maybe we shouldn't spend 4 years of this on a boat.
Right.
But I think if you can include them, then they can see how hard that was. And I think that's how it was for me. And then it was like, it's just one bite at a time. Like you're not going to make it all in 2 years, 5 years, even 10 years. Like we're talking 2 decades.
Right.
And so I think that's a big thing, is if you can include them in that, because I think that's the big one.
I think a lot of it's perspective too, right? I think some of it is, like most people, it's like, okay, providing for my family is giving those things that I didn't have, taking care of them, making sure they don't have to go through those failures and those difficult times. But then realizing that, okay, what's the end goal here? Is the end goal just to make life as they're with you? Because after they move out or whatever, they're really just, their life is separate, right? And you're kind of a visitor at that point.
Yeah.
Right.
And so are we wanting to create that so that life was just pristine and perfect and it doesn't matter after? Or are we trying to create people that'll have amazing lives after that as well?
Yeah.
And it's hard to have that perspective when they're 10, 8, 7 years old and they're just like, hey, let's go get ice cream. You know what I mean? And it's like that perspective changes, I think, as you get older. And sometimes, is it too late? At that point? And luckily, sounds like your dad was amazing. And so including you in that just helped you see that other side of it without maybe having to go through it yourself at the time.
Well, and for me, I'm always like, man, no one's listening to me. Agents don't listen to me. My kids don't listen to me. But I look back and I'm like, times when he was telling me things, I was playing Snake on my Nokia phone, or I was not paying attention. And maybe it was the third time that he actually told me, but I do think that they listen more than what we think. Yeah, I do think people listen more. They may not have the eye contact and nodding their head and taking notes, you know? Yeah. Like I wish they would. But I do think that they're paying attention and they're like, yeah, I remember when Dad told
Dad,
me
let me get my AI note taker ready to go.
Oh, Dad, luckily I actually carry around this journal every time you speak that I write everything down. And
but that would be amazing.
Oh, it'd be incredible.
Yeah. But I don't know if I want that. I don't want that recorded.
But that's where I think is I always have to remind myself, because I always bring it up, like, the reason why we're able to do this is I was able to do this. Or let me tell you this cool thing this project I put together and how it started and where it came from. Yeah. And I can see their face just glaze over. But I just get more excited and you know what I mean, and try to make it fun for them to listen. But I know that they do listen, because sometimes they'll bring it up and I'll be like, yeah, dude, yeah, you were listening. And so anyway.
I love it. That's great.
Well,
cool.
We'll have to bring you back on again. I know that you got to go get some PT done on that pirate leg of yours.
Yeah, absolutely. Got to build some muscle back here.
Are they going to help you dunk? Is that the goal?
No, that is not the goal. The goal right now is to walk without a limp. If I can walk without a limp, I am going to be so thrilled. Wow. It's been a minute.
Hopefully that happens. We'll have to check back in 6 months to see how that goes.
Appreciate it. It's been a lot of fun.
Yeah, thanks for coming on.
Thanks for coming on for sure.
Appreciate it, guys.